Welcome to This Explainer. Today, we're pulling back the curtain on an industry you probably interact with, whether you realize it or not. We're going on a deep, investigative look behind the scenes of the rigged retail trading industry. If you've ever thought about, trading stocks, Forex, or options from your laptop to make a little extra cash on the side, you absolutely need to listen close. Because the infrastructure of this whole space, it's not built for your benefit. In fact, it is systematically rigged against you. So let's get into it. Okay, let's dive into this. I want you to put yourself in the shoes of a predatory retail broker for just a second. Imagine you own a brokerage, right? And you have 10,000 clients. But you know for a factual certainty that 9,000 of those clients will inevitably lose all their money. As a business owner, how do you capitalize on that? Well, think about it. If you have 9,000 people who are guaranteed to be wrong, the most profitable thing you could possibly do is just automatically take the exact opposite side of their trades. And crazy enough, as it turns out, that's exactly what happens. This brings us to a really harsh, universally known reality inside the professional finance world. It's known as the 90-90-90 phenomenon, and it dictates that 90% of retail traders lose 90% of their deposited margin within 90 days. I mean, just think about that for a second. That is an absolutely stunning rate of failure. The vast majority of people who open a retail brokerage account are totally wiped out in just 3 months. But it really begs the question, how on earth is there a constant supply of new traders if the failure rate is just so astronomically high? That brings us to Section 1, the retail trading trap. So middle-class desperation, failing pensions, the desire for quick returns, it makes it amazingly easy to fall right into this trap. Think about how long it actually takes to open one of these accounts. What, 10 minutes? You upload a utility bill, you scroll past this massive terms and conditions document, and you just click accept. You don't read it. Nobody reads it. But legally, you're essentially signing a line that effectively says, I am happy to lose all my money. You sign that, and suddenly some total stranger is perfectly willing to lend you 100 times your deposit to trade with. Why on earth would they do that? Well, let's look at Section 2, the inversion narrative. Brokers offer you that crazy 100x leverage because of something called the inversion narrative. And it is exactly what it sounds like. It's a highly intricate system of lies pushed by brokers and their frontline educators. They basically tell you the exact opposite of reality to ensure your wealth is smoothly transferred straight from your pocket into theirs. They'll tell you that day trading always works, that you should over-leverage yourself, and that you should trade as frequently as possible on these tiny minute-by-minute timeframes. Why? Because that exact behavior guarantees you're going to trigger their massive profit streams. And this brilliantly illustrates exactly how they do it. Behind the scenes, there are 4 hidden ways brokers are heavily incentivized by your trading volume, and honestly, your losses. First up is the spread. They buy an asset at 5 and sell it to you at 6. Second is commission, which is just a simple fee on every single trade. Third is the financing turn. This is wild. The broker borrows money from an investment bank at a really low interest rate and then lends it to you at a higher rate so you can over-leverage your account. You are literally financing your own destruction. And the fourth, which is definitely the most insidious of them all, is the over-the-counter or OTC gain. Let's walk step by step through how an OTC gain actually works in real time. When a retail trader, someone the broker's algorithm has already flagged as a consistent loser, executes a trade on the platform, the broker's automated software instantly takes the opposite side of that trade. They don't even hedge it in the real market. So the retail trader predictably loses money, they sell the contract back to close their position, and the broker automatically keeps the difference. Boom! The broker just made the spread, the commission, the financing turn, and the OTC gain all in a matter of seconds. Guys, they aren't a service provider. They are the house in a rigged casino. Moving on to Section 3, spotting fake educators. So to keep this rigged casino running, brokers obviously need a constant influx of fresh victims. Remember, they only have about 90 days before the average account completely blows up. Their secret weapon here is the Introducing Broker, or IB, agreement. This is a massive, glaring conflict of interest. It's basically a contract where an internet trading educator gets a lifetime percentage rebate, we're talking usually 25 to 50%, from the broker, based entirely on the trading volume and commissions of the students they recruit. These educators are essentially indirect employees of the broker. They literally get paid when you trade. So of course they're going to teach you strategies that require you to press the buy and sell buttons as frantically and in as large a size as possible. These charlatans are everywhere online, but they do wave some pretty giant red flags if you know what to look for. First is that classic wonder kid backstory.
They claim they turned $10,000 into $1 million purely because 10 grand is an amount the average person can easily stick on a credit card. Second, they sell a completely false lifestyle. They use rented Airbnb mansions, rented supercars. They literally parade around with prop movie cash just to distract you. Third, they love hindsight trading, posting screenshots of charts way after the fact, claiming they magically bought the bottom and sold the top. They'll swear up and down that day trading is easy. And most importantly, they will have absolutely no verifiable regulatory history.
Now, here is a foolproof, actionable tip that will absolutely save you thousands of dollars. The legal definition of a professional trader is someone who performs the controlled function of managing other people's money, like at a hedge fund or an investment bank. And to do this, you must be regulated. So always check the regulatory register in your country. That's FINRA in the US, the FCA in the UK, ASIC in Australia. It's a binary fact, guys. If they aren't on the register, they were never a professional trader. They're just a retail trader playing pretend.
Which brings us to Section 4, Retail versus Professional. So the crucial point is, if the retail environment is completely toxic and backwards, what does actual professional trading look like? Well, it really comes down to dumb money versus smart money. Dumb money believes the inversion narrative. They trust the brokers, they trust the fake educators, and they act exactly how the infrastructure wants them to. Smart money, on the other hand, the investment banks, the prop desks, the hedge funds, they understand exactly how these conflicts of interest work. And because they understand it, they do the exact opposite of what the brokers want.
Let's break this down systematically. A retail trader's mindset is totally obsessed with unlimited upside and getting rich quick. A professional's mindset, however, is laser-focused on capital preservation and risk-adjusted returns. Basically, they want to get rich slowly and stay rich. Retail traders take these short-term, binary bets on stressful, minute-by-minute charts. Professionals, they manage systematic, long-term portfolios. Retail traders obsess over a single asset class, like just staring at one Forex pair all day long. Professionals, they trade multi-asset portfolios. They understand correlation, and they shift their focus to wherever the volatility presents a real opportunity.
And that leads us to our final part, Section 5, Trading like a Pro.
Now, what's really interesting about this slide is that it shows us how to actually break out of the 90-90-90 cycle. You have to look at the hard data. This chart is taken straight from Goldman Sachs' publicly available 2015 10K annual report, and it visually proves what true professional consistency looks like. Out of a standard trading year, they made money on 212 days and lost money on only 38 days. While 90% of retail traders are losing their shirts, Goldman Sachs has roughly a 90% win rate. Why? Because they're deploying the exact opposite strategies of the retail trader. They aren't staring at 5-minute charts trying to scalp pennies. They are managing deep, heavily researched portfolios. So the very first step to achieving professional results yourself is finding uncorrupted education. And that means looking for a 0% IB agreement. If an educator or an institution negotiates a strict 0% rebate with the broker, it completely eliminates that conflict of interest we talked about. They're no longer incentivized to make you overtrade. Suddenly, their success actually becomes aligned with your success and your attention, rather than your rapid financial destruction. Let's quickly summarize the core takeaways you absolutely need to survive in this industry. Number 1, you have to understand that the infrastructure is heavily rigged against you. The brokers are not your friends. Number 2, eliminate all conflicts of interest. Do not trust anyone who's getting a kickback from your trading volume. Number 3, stop chasing unlimited upside and focus entirely on risk management and downside protection. And number 4, emulate the portfolio strategies of real, verified professionals. Remember, government financial regulators are pretty passive and reactionary. They usually only step in after the retail money is already gone. You have to regulate yourself. The reality of the retail trading industry is super harsh, but understanding it is absolutely your greatest advantage. You can now see the strings attached to the puppets, and you know exactly how the house makes its money. So I'm going to leave you with this provocative question to ponder. Now that you know the truth, will you stay the dumb money funding the yachts of charlatans and brokers, or will you wake up, do the hard work, and trade like the smart money? The choice is entirely yours. Thanks so much for joining us on this explainer, and keep learning.